In a news conference this morning, Nambawan Super Chairman Reg Monagi gave an update on their 2021 financial results.
So members and contributors.
Their financial results for the year 2020 were severely affected by the coronavirus pandemic and the challenging economy. However, they have announced a net profit of 89 million kina. This allows them to declare 1% interest, which has been credited to members' accounts.
Nambawan Super's net asset value now totals 8.14 billion kina, up from 7.6 billion kina last year. Net profit for the year is 89 million kina, and that equates to a 1% return to the members.
According to the chairman, the year 2020 was not the year they had planned for. The difficult economic conditions caused by the pandemic heavily impacted values and results for many of the fund's key investments in the PNG economy. And while the 2020 results will be disappointing for members, the primary cause was the reduced values of some of the fund's well-established PNG investments. However, these are expected to bounce back when the economic conditions improve.
Despite a lower than average investment performance in 2020, compound average returns over the past 5 years have been 5.7%, almost a full percent over CPI for the period, which means real returns to members.
But despite the low crediting rate, the fund's net assets grew by 6.2% due to the strong membership contributions and now stand at 8.14 billion kina. The total contributions for the year 2020 were 893 million kina, an increase from 832 million kina. Total membership payouts were 525 million kina, a decrease from 546 million kina, and the fund membership grew to over 207,000.
2020 should be recognised as a challenging year, but it's also a year of innovation for the fund to try to look at how can we actually continue to service members so that we can actually make sure that people try to understand what superannuation is about for that long-term saving.
Going into the future, there are still many challenges. This includes employers meeting contribution obligations, payment from tenants and suppliers, unfunded employer benefits, among others. And engagement with members is difficult in this COVID-19 environment. But despite these challenging times, members have been encouraged to continue this saving culture.
In these tough times, I would encourage all members to continue to save and to not be distracted from saving by the changing economic climate. Savings remain critical to the long-term financial survival of all members, as superannuation is long-term.
Rayon Lakingu National, EMTV News.